Hi, good afternoon, everybody. So right now we're in the last segment of today's mid-year market outlook summit. So of course, right now this talk is about riding macro trends with micro futures. So without further ado, I will hand the time over to Thomas. Thomas, your call.
Hi, good afternoon, everybody, and thank you, Ethan, for the introduction again. I understand I'm standing between everybody and lunch. Okay, so earlier we have heard our esteemed speaker talking about the Futu Trade Momo trading platform. Okay, so you know the tools to get yourself engaged in the market, and we have Desmond talking about his technical analysis, analytical tools, and of course, Adrian shared with us the fundamental outlook, how he actually look at the market. For me, well, today I'm going to share with you how we're going to write those macro themes we talk about with micro futures. So we know roughly what we talk about in terms of macro themes. So what is micro futures? Okay. Well, before I go on, quick introduction of PZH Consultants. So I'm the founder. PZH Consultants is focused on product training. Okay, so in terms like futures, FX, interest rate products, skill sets, trading skills, for example, right? Financial markets, sales, how do we sell products? And also transformation consultancy. So that's a company that I have founded. You can check more about our services on this website, www.pzhconsultants.com. Okay, before we go on, just a quick disclaimer, whatever I say here is my personal opinion and is for training and education purposes only. All right, without further ado, let's talk about futures, okay? A quick refresher on the basics of future mechanics, because I think a lot of people out there in the audience, especially, we are all from the retail part, okay? Maybe futures come across as something that is a little bit more new, because I think we are familiar with stocks for sure, ETFs. So futures, all right. Maybe some of us have learned of it in school, but have not really traded futures in actual life, especially for your personal investment. Okay, so now I'm going to spend a little bit of time on the products part. Okay, so what is futures? Well, let's use CL. What is CL? CL is the crude oil futures as an example. So futures is basically a binding contract between a buyer and seller. Okay, just like a stock buy and sell contract, is an obligation. Okay, but for any futures contract, there is this underlying asset. All right, that futures contract is referred to, and it's an obligation between the buyer and the seller, okay, that will be settled at a future date, hence the name, the futures, and is traded through an exchange. What is an exchange? Like a CME, all right, CME Group, LCH, SGX, okay? So that's basically the definition of a future contract. It's a very simple contract. So what is the advantages? Why should we look at trading futures? I think some of it is that, first of all, we have to understand, because we said earlier that the trading of futures goes through an exchange. So anything that goes through an exchange, by default, there is no default risk, okay? So because your counterparty is literally a CME group, okay? So that's the first one. Second, liquidity, okay? For most of the contracts that's traded on the CME Group platform, okay, CME Group is highly liquid, and for traders like us, especially retail investors like us, we really want to trade in products that's liquid, okay, because we want to be able to enter and exit our position easily, okay. The next one is high transparency, okay, and this is important because the fact that futures trade through an exchange, that will mean pertinent information, very key trading information, like what? Like volume, open and closing, and open interest, which is the outstanding positions of the market in that particular futures contract, are all reviewed and reported by the exchange. So that gives a very fair level competitive platform, especially the small traders on the retail side. Next, leverage. Okay, so for futures, we do not pay up the full notional amount upfront. Okay, so the futures itself has embedded, by definition, a leverage effect. Okay, next, longer trading hours. Well, and this is important because for retail traders or investors, a lot of times we face a lot of black swan events, unexpected market occurrences that usually happen when the main underlying market is closed. For example, if let's say, for example, last year, at the turn of the year, the US basically attacked the Iranian high-ranking official via a drone attack. And that happened actually during Asian time. Okay, that actually happened during Asian time. So if investors want to react in the main markets, okay, for example, in the stock market, that's not possible because it's still closed. So this is where the longer trading hours, and most of the futures products are traded around a close 24-hour clock. Okay, so that's a very important point. Okay, and given all this above, the fact that there's high liquidity and high transparency and there's leverage effect, it really allows us to use futures as a important risk management tool in terms of managing the exposure of our portfolio. Okay, let me explain that a little bit further. Okay, for example, you have X amount of portfolio, let's say 100,000 of your portfolio in stocks. Okay, and it's across 20 counters, for example, and something happened. It's pretty difficult for you to square the position immediately because the market may not be open at that time. Okay, and that will incur quite a fair bit of transaction costs and slippage because you have to square all 20 stocks at one time. So this is where futures come in play in terms of risk management. You can actually use futures to do what we call a macro hedge. Why? Because it's leverage. You don't have to sell 100,000 worth of notional amount. All right, you can just do a small fraction, but at the same time, recreate similar risk on the opposite side, and hence allow you to manage event risk. Okay, and you can do it when the main markets are closed. All right. Okay, so these are the advantages of trading futures. I shall go and basically touch on some of the key features. All right, we said earlier that futures, okay, it refers to an underlying asset. And this asset can actually span across a spectrum of assets available. So, and they can group into commodities. So mainly agricultural, we have orange juice futures, energy, okay, oil and gas, metals, and we'll talk a little bit more about it, gold, palladium, etc. Equity indices, FX, and of course, interest rate. Okay, so it's spanned across, I would say, the entire spectrum of financial products that's available in the market. So after understanding what the underlying assets are, we have to understand how the futures contracts is defined in terms of size. Okay, so futures contracts, because you buy an underlying product, so you have to know that contract size. Okay, so I'm using here the yen futures contract, yen against US dollar. So this is an FX futures contract. Okay, so the code here is 6J. So this FX futures contract for yen against US dollars, the underlying is 12.5 million yen. Okay, that equates to about $12.50 per tick. Okay, so we measured about contract size and tick sizes. So, and the reason why I talk about, I use yen as an example, because for the yen against US dollar contract, we have actually 3 sizes available. Okay, depending on the notional amount that you want to trade. Okay, so institutional investors most typically will want to trade the the main contract. But for retail investors, okay, we have micro futures contract. Okay, and you notice your micro futures contract, the notional is a lot smaller. Okay, and the tick sizes are a lot smaller too. Okay, so that when you trade any futures contract, you first have to understand what is the size and what is the notional amount per tick. Okay, what's the price movement per tick? Next, because earlier we said that for futures, it matures down the road in the future. Right? It's an obligation between buyer and seller, okay, to buy and sell a underlying asset that occurs in the future. So for futures contract, typically it matures every quarterly. Some contracts have it monthly. So you have to check the contract specs of each future. Okay, so you have to take note quarterly or monthly. Okay, so we said earlier that for futures contract, it is something that is tagged on to underlying asset. Okay, so this underlying asset has a price. We call it the spot price. So you are buying and selling a underlying asset with an obligation to settle it in the future. That will also mean that your futures price, should track the spot price with some divergence, But the key here that you have to remember is that no matter the divergence, by definition, all futures contracts, the futures prices will always convert with the prevailing spot price at contract maturity. Okay, so you can buy a December contract on the oil futures, okay, and the December contract will have a different price from spot oil. But come maturity, these two prices will have to converge. So fine. What happens at contract maturity? Okay, so this we have to take note because for futures contract is broadly divided into two types of settlement. One is what we call a physical settlement. And by physical settlement, the buyer, right, will receive the underlying asset. It will be physically delivered to the buyer based on the contract specification where the delivery location is, etc., and the delivery grade. And the seller will receive the settlement amount. Okay. For certain futures contract, we have what we call cash settlement. Okay, so the beauty of cash settlement here is that there's no physical delivery. Okay, so the buyer and seller will net settle the price difference between the actual contracted future price and the final future settlement price, and the difference, okay, will be net settled. So one party will pay to the other. So the advantage here is there is no logistical issue in terms of taking physical settlement. Okay, so there's something that we have to take note of when we actually trade the futures. We have to understand whether that futures contract is net settled at maturity or there is physical delivery. Okay. Well, last but not least, okay, after going through very quickly the basics of futures trading, we have to understand the futures product code because that is what that is actually quoted on the platform. Okay, so here I go back to yen against US dollar FX futures. So the underlying here, just to recap, is a yen contract. So we are buying and selling yen. So the code here is 6JU9. So how do we interpret this code? Well, the first two characters is the product code. Okay, what does U stand for? Well, U stand for the month of delivery. Okay, so there is a unique alphabet for each month. So using quarterly contracts, H actually means March, M is June, U is September, and Z is December, or we can call it Christmas contracts. And the last digit here is the contract maturity year. So now looking at the yen against US dollar E-micro futures contract, MJY is the product code. Z means it matures in December, and 0 here means it matured in 2020. Okay, so there is a very quick run through in helping everybody to refresh their futures basic. Okay, so the next thing here is I would like to introduce everybody to this new product called micro future. This is a relatively new product that's introduced by CME. Okay, over the last 2-3 years, CME has rolled out micro futures on equity indices, energy, precious metal, forex, cryptocurrencies, and going forward interest rates. Okay, so using micro futures, and I mentioned earlier how micro futures could be a big advantage for retail investors as part of a tool in the arsenal. Let's look at the market. What are the focus of the market right now? And we have talked about it in length today since 10 o'clock, right? Inflation, okay? Upcoming Federal Reserve rate hikes, tapering actions, and of course, the Delta variant, okay? How that potentially could throw a spanner into the recovery story. And last but not least, I would say that, okay, the increasing tension or the developing dynamics between US and China relationship. So these are the 4 broad themes that I think will drive the market for the next 6 months, if not next 18 months. Okay. And for the next few slides, I will help everybody walk through what are some of the micro futures that is available for us to express your view. Right? It's an individual view, your view, whether you agree with our macro outlook or not, that's besides the point. But you will be equipped with the Momo platform, with the fundamental analysis, the technical analysis, and now with a new product to help you express your view on the macro market. How do we use micro futures to write macro tips? Okay. But before we go on, earlier I mentioned about the Fed new policy framework. Okay. And this is something that I would like to, at least remind everybody. 27th of August, Chairman Powell had already said, okay, going forward, employment can run at or above real-time estimates as maximum level without causing concern. All right. And the Fed has embarked on average inflation targeting. So we have to keep this in mind. Why? Because with Fed promise to keep liquidity ample longer and err on the side of caution longer than potentially necessary, I would say that the K-shaped recovery trend will continue. K-shaped recovery, basically different segments of the market have reacted differently to the stimulus, okay, and also reacted differently to the impact of COVID. So the tech, the consumer discretionary have led the way, things like Amazon, Apple, Nvidia, etc. Okay, Zoom, right, the platform that we're using, the fact that we are still communicating via this platform, point to note, right? I think this trend will continue. In fact, I should not be calling it a recovery anymore. I think it's a transition. Okay, I don't think there's anything there's no going back now, right? The world has changed. Working from home is something that, people have accepted, people have adapted, transitions has been made. So from the equity side, correct, we have a few contracts that's available, right? If you like to express yourself using S&P, right? S&P said there is MES, which is the micro E-mini S&P 500, okay, NASDAQ. Okay, if you want to look at a small cap, there is the Russell 2000. Okay, and if you like to look at the Dow, there's the MYM, which is the micro E-mini. Okay, so, and take note about the tick sizes here. Okay, so it's $5 per times the index for S&P 500, for example. Okay, and the settlement methodology, which is financially settled. Okay, the next one is Well, we talked about inflation earlier, right? So when you talk about inflation, the first thing that comes to people's mind a lot of time traditionally is gold. Okay, my personal view is that it's going to be transitory. So in that sense, gold's performance is unlikely to repeat in 2021. Okay, that's my view. So what is well view? But regardless, what is well view? I think the metal micro futures, the micro metal futures covering gold, silver, and palladium will help you be able to enter into the market. All right. Okay. So take note of the tick sizes here. Okay. And the settlement methodology. Next is oil. Okay. And oil is something that is is the second thing, if not also the first thing that people come to mind when we talk about inflation, oil prices. Okay. To me, I think oil hits the peak. And then from now onwards, it should be range bound. And if you want to express your view in the oil market, there is the MCL, which is the micro WTI crude oil futures. The main contract is WTI crude oil futures. So there's a micro, okay, it's only $100, 100 barrels per tick is only $1 and it's financially settled. Okay, so you have no risk of the seller knocking on the door to deliver 100 barrels at the doorstep. Okay, it's financially settled. Okay. Now let's look at our FX. For those that is interested in looking at FX, okay, there is the micro FX futures, and from here you can look at the dollar index that has bounced off quickly from the bottom, partly due to the fact that the market is repricing in Fed tapering and Fed hike scenarios. Okay, so what are some of the micro futures, micro FX futures available? Okay, covers all the way from Euro, Aussie, Yen, CAD, Sterling, Swiss, Yen, even emerging markets like India, again, US dollars. The key here is you have to take note of the sizes and the price per tick. Okay, I have here the link into CME Group's website, which will give you the full details in terms of product specs. Okay, so moving away from the traditional products, for lack of a better word, let's go look into the future, which is Bitcoins. Okay, for those who want to participate in Bitcoin, I know there's crypto exchanges out there. Okay, but there is also micro Bitcoin futures that is available right now for trading. Okay, and the size is only 0.1 Bitcoin and per tick is 50 cents US per tick. So it is really very affordable from the retail perspective if you need to express yourself in the Bitcoin market. And a big advantage of this is that you can go both long. As you can see here, going short, the ability to go short Bitcoin is also very important because look at the volatility here. Okay. Next, let's move on to inflation, right? The first topic we talked about earlier. Okay. Quickly here, this is a chart of the US CPI versus Fed funds rate. Okay. Dragging all the way back to 1955. And point to note here is that the Fed managed to get back ahead of the curve all the time. Right? Maybe in the 80s, there was, during Paul Volcker's stage era, there was a little bit of lagging and the US was a bit behind, the Fed was a bit behind the curve. Okay, so the question here is this going to be transitory? Are we coming back here? Or is the Fed going to have to play catch up and be staying ahead of curve if inflation stays elevated for longer than expected? Okay, and I have already shared with everybody my point of view. My point of view here is this, okay? I think yields is going to stay compressed because inflation is going to be transitory. So if you want to look at about 10 years, US Treasury, which is a big bellwether benchmark, I think that the more likelihood is for yields to stay below 2% for the 10-year, okay? In the foreseeable future, I don't think we're going to retest back the 1.77 high, okay? So then, the question here is, from the retail point of view, how should we express this? Okay. Traditionally, the way to express interest rate trading view is to go into the US Treasury futures market. Okay. But the good news is that there is going to be a set of new micro Treasury yield futures. So the futures are expressed in yield terms, not bond prices, because that potentially can be confusing, especially to the retail space. So in terms of yield, and this set of micro treasury yield futures is going to be raw on the 16th of August 2021. Again, the CME website for more details is listed here below. Feel free, if anybody would like to know more about it, to log on and check it out yourself. Okay, so just to sum it up, I have introduced everybody micro yield futures, which is a big, it's a very exciting set of futures that is tailored for the retail clients. If anybody wants to know more about the CME Group's products and their analytical tools, you can download the app. Okay, where you can even run things like the FOMC FedWatch tool, or you can, scan the QR code, listen to more on their Fresh from Trading Rooms update, and the education web link is here. Last but not least, this is my company's contact details, the QR code to my website, my LinkedIn. Feel free to link me up on LinkedIn or drop me an email if you have any pertinent questions to some of the information that I have shared. Okay, so with that, I wish everybody a great lunch and an even greater weekend ahead. Ethan, back to you, please.
All right, thanks, Thomas. It was such an insightful and might have been wondering, how to trade futures, or you have done a great job in demystifying it, at least, right? And showing what are the points that investors can take advantage of trading futures. All right, we've come to the end of the global mid-year market outlook. So once again, thank you, Thomas, for being one of our panelists and also the speaker. And thanks everybody for tuning in, right? So I'd like to thank our co-organizer, Mumu, for co-organizing this as well. All right. So once again, I'm Ethan, Chief Operating Officer at Investing Note, and everybody just stay safe. And if you have missed any of these sessions, please do rewatch it, and the links will be made to you via YouTube Live, right? So you'll be notified on how to watch those webinars soon. All right. So everybody take care, stay safe. Thanks, Thomas. Thanks, everyone.
Thank you.
All right,
Stay
thank you.
safe. Bye-bye.
Bye-bye.